Hey traders, Raghee here. Welcome to Charts and Coffee. All right, rocking the Grogu mug. Protect. Right now, we're going to be looking to protect our capital as we go into Friday. And so, hope you got your coffee ready. It shan't be a boring expiration at all. All right, great to see everybody. Well, let's just get into it. I think we all know what we're cruising on into with the calendar. So let's just jump into it. And first question up. Hey there, line watcher. We are about to see a taper tantrum similar to 2018. No, I don't believe so. I don't believe so at all. Um, we saw, I believe, the tantrum. So if you want to look at, so anytime, this is the way that I do it. Anytime you are looking at a reaction, there usually should be some proximity to the reason. In other words, what's on the calendar. And in the case of Powell sounding far more hawkish, there's the extent of your tantrum. In the case of the ES here, it basically just cycled us out of what was an uptrend. We went into chop. So if you want to use sort of the jargon of market trends, market trend analysis, the lingo of Charles Dow, we moved from a markup into distribution. All right. Well, since the trend that preceded was bullish, I'm still bullish, right? Chop is not inherently bearish, and a broken downtrend or broken uptrend is not a downtrend, just as a broken downtrend is not an uptrend. It's chop. So I don't think we saw a tantrum at all. In fact, I thought that Powell sounded pretty darn, I won't say dovish. Oops, that's not what I meant to do. Hang on. I don't think he sounded dovish, but he sure did not sound more hawkish than the market had already priced in, had already discounted. That being said, we know that the NASDAQ is not going to love higher rates. And you take a look at, say, the 10-year futures. Really unusual action. If we're looking at higher yields, higher rates out of the 10-year, out of the 30-year, these should be heading lower. So we're in a very strange reaction type environment. This is the TNX Treasury note yield. This should be heading higher. So we're in a really strange. We've gone down the rabbit hole in some kooky way, but we have a lot of forces colliding with one another. Year-end rebalancing, tax loss harvesting, window dressing, all mixed up together in these short 4 weeks. So is the NASDAQ a buy? If you checked out the free video last night over at the YouTube, Simpler Trading YouTube channel, I said, we've been talking about this here in Charts and Coffee. We're not expecting a broad-based rally, but we are looking at corners of the market that have been pretty darn strong. We took a nice little ride higher in the XLK the other day. And then now what I'll be doing, and my mastery members, you guys know this, futures folks, you all know this. We said, hey, we did not have enough of a pullback in Apple. I really don't want to focus on Microsoft, but I love those two stocks. XLK is where they dovetail. We might look to do something like this again, either today or Monday. So if you're curious, okay, Rog, I'll play along. What are those corners of the markets? We've got to focus on the ETFs that are weighted with the relative outperformers in this environment, not necessarily the broader averages in the S&P, the NASDAQ, the Dow. So hope that helps, line watcher. Tim, good morning. What would put the agro long entry price in Apple? Okay, so how would we buy Apple? Well, I want to buy Apple. Next question is from where, right? So what we're really diving into is where is the dip? Now, first of all, is the dip even valid? Yep, you cruise on down to the JT Multi, you take a look at the green grab, absolutely, good to go. The next thing we're going to look at is, well, from which level? I would consider the 13 fairly aggressive. The 21 would be great, but the way that I would probably look at this now is 13 smaller percentage of your budget spent building that position. Some people will call that a starter position or just putting a little, putting the toe in the water, scaling in. That's the way I look at it. And then when you get down to look at these volume ledges right here and right here. So this is actually in the wave. So if we start looking at the area between about 165 to about 160 and a half, that's the conservative area. That's the way I think about how I would enter Apple. So if I have a smaller position built here and we keep moving lower, I have a pretty good shot of being able to withstand that unrealized loss, AKA heat. And then what I'll also be able to do simultaneously is if I need to scale out of that aggro leg of the trade, I can. We should be very nimble with each leg, with each trigger. Scale in, scale out. That's definitely at the heart of what I teach you all to do in day trading and in this, which we would largely consider a swing trade. Something that I think we could be in for 3 to 4 days to maybe 3 to 4 weeks. Okay, so 21's fine. 13 would be something to think about, but it would be aggro. Thanks for the question, Tim. Happy Friday, everybody. Good to see everyone. Thank you. Good morning. Good morning. Tracy asks, is XLK at 167? All right. A good place to enter. Well, let's look at where 167 is. Let's put that right on the chart. So 167 is going to put you where? Right about there? Yeah. Yeah. So there's two halves of this trade. I would look at this as two halves. You have your aggro zone in there, and then you have your conservative zone in the lower half of the wave. So what does that mean? Between the 34 EMA high to close, between the 34 EMA close to low. So the top line of the wave to the middle line of the wave, the middle line of the wave to the bottom line of the wave. By the way, if you don't know what the wave is, it's largely built on the 34 period exponential moving average, high, close, low. All right. These are really easy exponential moving averages that you can add to any platform. But if you want the color-coded candles that accompany it, head on over to countdowntrader.com and you can download the Wave and Grab for TradeStation, for Thinkorswim, and you can actually grab those. You can grab the grab right from within TradingView if you go into indicators and search for Simpler. I've made a number of my indicators available free, so you can go get them at either Countdown Trader or right here within TradingView. Love this platform. I'm a huge fan. So yes, I think that's one of the levels, but it would be one of potentially 3, right? So if we're focusing on the more conservative zone, I like where your head's at. I like where you're thinking to position yourself. That would be really much more the lower end of the zone, lower cost, frankly, lower risk. Risk being, in this case, a percentage of cost of trade. So yes, I mean, in a simple answer, yes. And then that's how I would visualize the zone. But remember, this is options expiration Friday. Take a Dramamine. I am sure it will be a wild one. Next up is Netflix. All right. Looks like it may try to, looks like it may try 584 support again. Hey there, Ron. What are some good indicators of when a stock is successful in making the hold of support? Well, I always think about Simon Sinek, Start With Why. Some of you might have read that book. Actually, excellent book. Start With Why and Know Your Why. 2 really good reads. And the way that I look at it is have more than one why. And preferably have a why that looks at price, have a why that looks at volume. Right? You can always have a why that looks at, indicators. I'll just throw a percentage sign to represent that. So this gives you 3 avenues of why. I have a technical reason here, 200 propulsion, pretty thick layer of volume, right? I got a point of control, another reason for some volume. The challenge with Netflix, Ron, is that I am bullish. It's just it's choppy now. So what we have to do is ask ourselves, where is this potentially oversold? That's tricky. If someone said, okay, Rob, got it, but what would you look at? I look at the point of control and I look at the 200 propulsion. So that's going to put us approximately 590 and a half down to 575 and a half. And that's the zone where I can start to scale in, right? I'm not going to back the truck up at the point of control. I'm not going to, I'm not going to assume that that's the level where everything is just going to turn on a dime. However, if we're starting to slow the trend lower, that's one way to look at it. The other thing is you can look at different types of patterns, minor lows, inside days, price patterns are pretty good ways to look for opportunity when it's a little bit more about, are we recovering? Are we able to, kind of some escape velocity out of the zone? All right. So thanks for the question. Alcoa. We've been getting a lot of questions about Alcoa lately. And, I will say that I'm not in Alcoa and I'm not clearly definitely not going to buy it as it gaps higher. But my thoughts on it are basically, let's start with the most basic. I don't want to short it. I don't know what's going on with my eye today here. Um, I do not want to short it. So the next idea is, well, how can I buy it? And I'll tell you, Kay, maybe someone else has another play in Alcoa, but I think it's really important for me to say, I don't have a play with where we are right now in Alcoa. And I'll tell you, quite frankly, I don't even know that Alcoa would make it to my watch list, because when I think about where Alcoa is within the overall ETF passive investing world, of course, it lands me at XME. When I look at XME, it's a bit of an outgoing tide, right? It's struggling. So Alcoa is, in this regard, it's a relative outperformer, right? Within the XME, that's a good start. But then I ask myself, are there other relative outperformers? And MP is a relative outperformer. Freeport McMoran, not so much. But I wouldn't short Freeport McMoran. It probably is a pretty good buy off the VWAP, the volume weighted average price. I look at CMC, I look at RS. And what I'm trying to do as I go down the list of the heavily weighted names within XME landing at Alcoa, I have to ask myself, what has a better bullish structure? I'd probably say MP is my most preferred, but STLD has a great 200 propulsion VWAP setup. So now I've really got to ask myself, where are the setups for me on the XME conversation, of which Alcoa is of course, clearly being the sixth or fifth heaviest weighted name within it. It's a obviously a big part of that. But there's nothing I can do when we're gapping up. So that's the way I'll process it. I know it's probably not super helpful to say I can't do anything here, but I really can't. I really can't do anything up in this area. But I love a lot of the other names that Alcoa sort of introduces me to. Alcoa has introduced me to some friends, right? Now we can keep digging a little bit deeper, looking for opportunity. So thanks for the question. All right, UUP. Yeah, I love the dollar index conversation. Look, there'll be volatility here and there, but ultimately, macroeconomically and technically, we have a trend that favors higher highs. And we'll give ourselves time. We're looking at UUP that expires in March. That's one of the things we're doing in the mastery right now. We're looking at UUP also in the futures room. So DX futures or the UUP ETF, 6 of one, half dozen the other, however you want to get long. Love these ETFs. We've done a class every year on that topic because it gives a lot of non-futures traders the ability to access some of these via options. And it gives a lot of futures traders who want to spend a little less initial margin and have a little bit more of a cost-controlled entry via long calls into a market. So yeah, I'm with you. We have actually UUP buys set up, and I do like the long here as well as the short on FXE. So PT, like it a lot. We've been sticking with this one, and I like it a lot. All right, Lennar. Hey there, Chris. Yeah, Lennar is a setup that we talked about. We gapped down through our zone. I still like the setup. As I mentioned yesterday, when I sent the alert before the bell rang to the mastery folks, I said, hey, look, you can get too much of a good thing. And I know some folks were already in, but you noticed that we were able to manage a lot of the heat of yesterday's move lower. I love that move. I just thought, let's be a little bit more cautious about it. I will always err on the side of caution, but it's absolutely still a buy. Some folks are in it, and I think you're fine. Today, we'll look to see if we can follow through with our plan to be buyers. And remember that Lennar, in many ways, is one, a relative outperformer, and two, it's a really great way, inexpensively, to get into two of the best trends that are out there at that ETF, at that sector level, and that's construction, home builders, ITB and XHB, respectively. ITB, XHB, Lennar is weighted pretty decently within both. So I do like both. I do like both. And what are my thoughts? I still want to get long in some way, all three of those names, Chris. So great question. Thank you. Kay asked, good morning. If we continue in CHOP, given interest rate headwinds next year, what option strategies will I employ in CHOP? So Kay, structure always precedes strategy. Structure dictates strategy. If it's a choppy market, I'll look for overbought, oversold strategies. If it's a trending market, I'll buy the dip. Now, when you talk about option strategies, Kay, I'll tell you what. Early on in my career, I was a long call, long put trader, as many, I think, new traders tend to be, right? So 30 years ago, 35 years ago, actually. My first trading, my very, very, very first foray into trading was I had IBM stock that my father had given me, and I would write covered calls. So options are kind of the first market I really started to play around with income wise. But once I started getting more speculative and directional, I started just focusing on long calls, long puts. Well, fast forward about 10 years from there, and I'm about 25 at that point, and graduated college and thinking I need to get a little bit more serious about my options trading. Look at all these different strategies, writing calls, different multi-leg strategies. So I spent some time doing that. Really didn't like it. Really didn't like it. So put credit spreads, verticals. I did that for a while and found that if I get my timing right and I'm playing directionally, I could easily just focus on long calls and long puts. So to answer your question, I'll still be focusing on long calls and long puts going into next year. Are there places to collect credit? Yeah, if I have a longer term chop, I think the first thing that pops into my mind are things like condors. But for the most part, I'm still very speculative because my belief is while we might see a receding pool of trends, there's going to be a trend somewhere. Money has to flow somewhere. It might be a smaller group of names for a watch list, but I do believe we can find a trend somewhere. And then where that trend is where I'll play my directional long calls, long puts. So in CHOP, it's still long calls, long puts. It's where am I getting in? One, is it CHOP? What's the range of the CHOP, the overbought, oversold, and then getting the timing right. And I think a lot of traders who think, well, I'm told again and again, you can't make money unless in options unless you're writing premium. I know plenty of people who write premium that still get, their what's handed to them. Timing and volatility is the option secret, not writing premium all the time. Or really, frankly, the secret isn't being long calls and long puts. The secret, if there is one, is watch list building. What you trade is actually more important than how you trade it, and the timing for your entries to reduce cost when you're long, call or a put, and to maximize credit, to maximize what you're collecting when you're selling premium. You get that volatility timing down. That's really the quote unquote, that's that, secret, if you will. That's really the trick. Any thoughts on why the YM is holding up best over the last few days? So actually, the video that I did yesterday on the NAS could be as easily have been done on the S&P or the Dow. And that is, are we taking a broader average like the Dow First of all, not expecting a broad-based rally as we go into the end of this year, and asking ourselves, where is the strength within that index? And XLK, XLV, XLF. We can get in even into things like IYT and XLI, but this idea that industrials and transports are important within the Dow anymore is dated. It's something that of course is a Dow tenant, but of the six tenants, it's probably the one that's no longer really applicable because the composition of the indices have changed so much so that this idea, which easily could have been discussed 20 years ago, even maybe 15 years ago, but today in the modern composition of the Dow, which is nothing like Charles Dow's Dow Industrial Average, the industrials and the transports have almost no bearing, really, on what the Dow is going to do because the top two weighted sectors are XLF and XLK, financials and tech. And then when you think about healthcare, when you think about tech, and even financials, when those three sectors are doing well, your Dow is going to do well. By the way, that's going to then sort of have another positive effect on the S&P, which is a little bit like the Dow, and it's a little bit like the NASDAQ. It's usually caught in the middle of those two stories that are more disparate, right? Dow's quite different than the NAS, and the S&P is sort of in that tug of war. So why is it holding up? Look at the components that are heavily weighted within it. And I think it'll make perfect sense how to understand the way that I talked about the NAS in the free video yesterday, how to understand why the NAS may be in a tug of war between, say, XLK and XLC, and how then we can say, look, NAS, you go do your thing, but I'm going to go find your relative outperformers, top down at the sector, ETF, or stock level, and I'll play the relative performance a little bit more granularly, right? Michael asked, these past few weeks have taught me knowing how to day trade would have been extremely useful. Michael, we've been doing probably more day trading in the futures room and even in my sector secrets mastery because that's a gear that I definitely like to shift in the first 2 hours of the day. Would have been, so I agree. And here's why, Michael, whether it's just these past few weeks or for the duration of your career, being able to manage multiple durations and multiple time frames just gives you a better staying power in the market. But I'll even go so far as to say, even understanding multiple asset classes will give you a great staying power because whether it be duration or asset class, the sun is always shining somewhere on the markets. It's our job to find where the opportunity is. So would my 2-hour day trading course be a good, the class that I did, Michael, June of this year, when Trish put that class together, sort of curating sort of the best of what's working, as opposed to what we did in 2020, 2021 presented different nuances to that first 2 hours of the day. And I think we're going to see something more akin to 2021 going into 2022. So the playbook class that she put together and that we did in June would definitely be, I believe, the way in which you could build a really great foundation. And I think probably mid-year 2022, once we start to see how 2022 is behaving, some of the tools, mostly emphasis on volatility. We're going to be doing another day trading class with the emphasis this time on volatility. Every time we come around to do these classes, there are different aspects of what makes for better day trading more important. So this year, we really focused on a lot of daily time frame nuances, which the last couple of weeks have been amazing. But I've been finding the volatility has been an increasingly important part of it. So I think when we meet again in, I think it's June or July, to do the day trading class, we're going to be diving into my HPMRs and volatility. So each one of these classes continues to build more and more of a layered approach, a more complete approach in day trading. So the simple answer is yes, and I would go specifically with the playbook class from 2021. All right, hope that helps. And however it is you want to day trade, right, whether it's my style or not, please do add that gear, to your approach, because I think you're going to love being able to say, you know what, longer term's choppy, fine. I don't want to have to worry about follow through session to session. I'll just shorten the time frame, stay more nimble, and just, sort of ninja my way through the market. So great, great, great question. Battle Hawk, thanks. I appreciate that. I appreciate that. Oh my gosh, it's 9:25. My apologies. Ran way over. Totally lost my track of time. But thank you as always. Thank you as always for those of you that caffeinate and dominate with us each and every morning. We're looking forward to expanding our charts and coffee conversation and show into 2022. So stay tuned. Got some exciting things planned. And yes, that day trading class is going to be something we'll be doing probably early summer. And then we've got a lot of very cool things planned for 2022. All right. So thanks as always for joining us. Be good to each other, support each other, be positive. We've been talking about it in the chat rooms. You're actually smarter when you're positive. Your brain works better. So thanks for being a part of the community. Have a wonderful weekend. I will see you all on Monday.